the better it is for you, because at the end of the day, it's all about where you end up. And that's sort of my philosophy. It's about getting established now, getting good at what you're doing now so that you can extrapolate it out. And then at the end of the day, you're going to land in a place where you say, yeah, I had a lot of bad trades, but you know what? At the end of the day, it was worth it because I made this much more money than I lost. And as long as you're doing it for the right reasons, like don't go after money for money's sake. Don't go after money for money's sake. Money is the root of all production, not the root of all evil. It's power. It represents the score. If you're running a business and you make $100, if you make $200, that's twice as effective as $100. It's like that simple. Like, and money is a great indicator of how your business is doing.
Do you consider the market like a casino and the house always wins? And like, should people even be bother investing in companies? Or are we just
I do
all degenerate gamblers?
a little bit of both, I guess, but I did not think that until recently. And now I absolutely think that. I think that the playing field is tilted. They're moving the goalposts. I think everything going on right now with the stock market is completely unrecognizable from what it is intended to be. If it's like if they just print a bunch of money and they say, okay, we measure inflation differently now, and we're going to change the companies which are on this index, and we're taking these ones out, and we're going to replace them with better, more modern ones. And if all of these things going in together, and they're going to control the interest rates, are doing, they're keeping the interest rates so low, they're going negative in most countries other than America so far. And it's just, it's not what it used to be, and it's not what the intention was. It used to be that you get a slice of a company, and when that company does well because the economy grows, you're probably going to get enriched. And now what it is that you're just taking chances, you're taking guesses, and even if you do it right and you do all your research, your homework, you're a good investor, you're still going to be able to find ways to kind of screw you over. Sort of like if they decide, yeah, we're going to compensate gold, or they say, yeah, we're going to go to a digital currency, all of that. This is just, I don't want anything to do with any of this. And so my role is kind of changing in the way I see myself, is that I'm trying to help people get through this next period of the economy, which I'm expecting to be incredibly bad. And I don't think anyone else is seeing it like that. And I'm just going to be here to help people through it as best I can. I think that they're going to need somebody to help. So I think I'll be that person. But it's just, I feel like it's the time to be moving into precious metals, specifically gold and silver right now at this historical time in the world. I think a couple of years from now, if you're getting into precious metals now, you're going to look pretty smart.
Hmm. And people are like, oh, it's correct. And it went down from 2000 to 1700. And I think it just short term people looking at the bond market, but really it's good for us little guys here that you should be happy you're seeing these corrections in these companies. You can re-enter. Some of these are pre-COVID prices.
I bought some more the other day. You saw my newsletter, I think, or you might have seen on my video. I bought more Barrick Gold long-term calls just the other day because I'm like, these prices, I'm sorry, I'm willing to go down the ship. If I put some money into this and the Barrick Gold never in the next couple of years doesn't make me lose 100% on that investment, I'm fine with that. If I lose all my money, I'm fine with it because it's so obviously correct that gold prices will go higher. And if they don't, it might be because of manipulation, maybe because I'm missing something. But the point is, if they did go lower, I'd be comfortable with myself that, okay, I missed that one. I'd be fine because I just don't see it. I just don't see that it won't do really well.
Hmm. Well, yeah, and it's I can't I'm on the same boat as you with inflation because there's a difference between base money supply and broad money supply. And when the money gets into the hands of the people, that's where we're starting to see inflation. And I'm really worried about how much inflation we're going to actually experience once the floodgates open up and it goes back to normal.
You want to see a preview? The stock market, real estate market, all of that is a preview of the kind of inflation you're going to get when you go to the grocery store in a few months from now. You get a combination of the drive-through at the fast food place. I got one of theirs like $12 or something. One is like combo number or whatever, like just one combo with some fries, and it's like I was like, that can't be right, because when I was a kid, I'd go to Taco Bell and I get about 14 pounds of food for about $1. So that must be inflation, right?
Yeah, here in Thunder Bay, small little city, houses are going 30,000 over asking. It's insane.
I I don't want anything to do with it right now. I think that there's way more overreach right now than we've seen in our entire lives. And I don't think that there will ever be a bigger collapse of an economy in our lives than we're going to see in the next few years. And this is, again, my opinion, and I'm wrong 100% of the time, and do not listen to me.
Right. Always wrong, Peter.
Always, man, always.
So, one thing I talk to friends that also invest, and they're like, well, if you think the market's going to go down, why are you investing in gold and silver stocks? They're in the market. So, can you explain that to people? Because that's a common thing I hear.
Yeah, and it's a great question too, Kyle. It's like the gold, if I see gold prices going higher, in my mind, what happens is that all the gold mining companies have their profit margins increase. So if gold goes up 10 cents, profit margins go up, $1. It works out that way. Okay. So a little bit of gold increasing in price will really help all the gold mining companies, but it's not going to, if the stock market crashes as it's poised to do, then every stock will go down pretty much, but not certain ones, such as a company like Avino Silver or some of these gold mining, smaller gold mining companies, because their profit margins suddenly balloon.